Welcome to episode 108 of the Ontario Mortgage and Real Estate Insights podcast. I'm your host, Steve Hammond. Today, we're diving into some intriguing developments in the Toronto real estate market. We'll explore the significant loss in value of a Toronto condominium purchased for $1.4 million just 2 years ago, and how interest rate cuts are shaping the landscape for buyers and sellers alike. Let's start with a remarkable story that highlights the volatility of the Toronto real estate market. A one-bedroom, one-bathroom condominium in Toronto was initially sold in February 2022 for just under $1.43 million. Fast forward to September 2024, and the same property was relisted, eventually selling for $1.1 million earlier this month. That's a staggering loss of $328,000 in just 2 years. This particular condo, which boasted original metal warehouse windows, city skyline views, soaring 13.5-foot ceilings, and over 1,100 square feet of living space, was a testament to the high demand in the Greater Toronto Area's real estate market 2 years ago. Back then, cheaper borrowing rates contributed to skyrocketing property prices, making it a seller's market. However, the tide has turned. Throughout September, buyers began taking advantage of more affordable conditions, spurred by interest rate cuts and lower home prices. It's not just this condo that has seen a drop in value. Similar trends are being observed across Ontario. For instance, a 3-bedroom, 4-bathroom home in Kitchener sold at a $460,000 loss, and a 4-bedroom home in London experienced a $650,000 loss after 4 attempts to sell. In Oshawa, a custom-built home sold at an eye-watering $800,000 loss. According to the Toronto Regional Real Estate Board's latest market report, home sales increased throughout the region year over year in September, as more affordable conditions brought more buyers into the market. TRREB President Jennifer Pierce noted, as buyers take advantage of changes to mortgage lending guidelines and borrowing costs trend lower, home sales will steadily increase in relation to population growth. With every rate cut, a growing number of Greater Toronto Area households will afford a long-term investment in home ownership, including first-time buyers. The Toronto Regional Real Estate Board reported 4,996 home sales through their multiple listing service system in September 2024, marking an 8.5% increase from the 4,606 sales in September 2023. Despite this uptick in sales, the Multiple Listing Service Home Price Index Composite benchmark saw a 4.6% year-over-year decline in September. The average selling price of homes in September 2024 was $1,107,291, which is down by only 1% from the September 2023 average of $1,118,215. TRREB. Chief Market Analyst Jason Mercer explained that the increase in new listings over the same period resulted in a better supplied market, giving buyers increased negotiating power. This shift led to moderate year-over-year price declines, particularly in the more affordable condo apartment and townhouse segments, which are popular with first-time buyers. Now let's shift our focus to the recent interest rate cuts by the central banks in Canada and Europe, which have been warmly received by real estate professionals across both regions. This significant development is expected to provide a lift to the industry, as many in the field anticipate that the United States Federal Reserve will follow suit later this year. In Europe, the European Central Bank made the decision to cut rates by 25 basis points across 3 key interest rates. The rates on the main refinancing operations, the marginal lending facility, and the deposit facility were decreased to 4.25%. 4.5%, and 3.75% respectively. The bank justified this move by citing the inflation outlook, underlying inflation dynamics, and the strength of monetary policy, stating that it is now appropriate to ease the degree of monetary policy restriction after holding rates steady for 9 months. Meanwhile, in Canada, the central bank made its first interest rate cut in over 4 years, reducing its overnight lending rate to 4.75%. This comes after a period where the Bank of Canada's policy rate reached a 22-year high. The country's other banks are expected to follow suit by lowering their prime lending rates in the coming days. These moves are seen as a response to a slowdown in the property industry, which had been dealing with the effects of high rates initially implemented to combat inflation following the pandemic. In Europe, the rate cut is expected to bolster economies across the continent and facilitate the refinancing of loans against properties purchased before the interest rate hikes began in early 2022. Some professionals are optimistic that this cut could pave the way for further reductions later in the year, although there are concerns about the timing and impact of the recent cut. David Ria, JLL's Director of Macro Research and Chief Economist for Europe, the Middle East, and Africa, noted that the rate cut opens the door for both further cuts in the future and to a future compression in real estate yields, an attractive prospect for investors. He further explained that lower borrowing costs and the potential for capital value appreciation could enhance both underwriting capacity and willingness, while also increasing transactional liquidity. In Canada, real estate professionals are hopeful for additional rate reductions that could further decrease borrowing costs for developers, owners, and buyers. Bank of Canada. Governor Tiff Macklem acknowledged the possibility of more cuts while emphasizing the progress made in curbing inflation. Luke Simerda, Director of Research in Canada for commercial property brokerage Marcus & Millichap, highlighted that while the recent rate cut might not immediately trigger a surge in investment activity, it signals a downward trend in borrowing costs, instilling renewed confidence in commercial real estate investors. Phil Soper, President and Chief Executive Officer of Royal LePage, echoed this sentiment, noting that the interest rate cut is a welcome sign for potential homebuyers. According to Soper, research indicates that half of the sidelined homebuyers in Canada plan to resume their home search once the bank rate begins to drop, which could lead to increased activity and upward pressure on home prices in the latter half of the year. That's it for today's episode of the Ontario Mortgage and Real Estate Insights podcast. We appreciate you tuning in to explore the latest developments in the real estate market with us. Join us next time as we continue to bring you the insights you need to stay informed and make smart decisions. Until then, take care and keep your finger on the pulse of the real estate world.